Hello and welcome to Livewire's Fund in Focus. I'm Ali Selby and today we're sitting down with Metrics Credit Partners Managing Partner Andrew Lockhart to learn all about the firm's new fund. It's called the Metrics Real Estate Multi-Strategy Fund. It's now open to investors via initial public offer. And today we'll also be learning about the opportunity in commercial real estate today. Thanks so much for joining us today, Andrew. First up today, I'd love to know what sets Metrics apart from the rest of the pack.
That's an interesting question. I guess for us, we've been doing it a long time, so I think our team is highly professional, highly experienced at what we do. We really invest in long-term relationships with people we do business with. And part of that is we also have a very clear focus on delivering good outcomes for our investors. So I think our team is across the board, committed to delivering great outcomes for our investors, and I think that shows in the performance and track record of our business. And hopefully that is something that does set us apart from others in the market.
The new fund invests in commercial real estate, debt and equity. Why are you seeing opportunity in those areas of the market today?
I think for us, we look at it and sort of say there are opportunities across the entire capital structure. And in our business, we have clients that are looking for both debt and equity opportunities. So when we're looking at structuring a transaction, we're looking at the ways in which we can assist our client in terms of access to funding and capital. But as a result of that, that really does create opportunities for investors. And so there are some investors that are looking for more stability, income through the debt piece of the capital structure. Equally, there are other investors that are looking for higher returns and are willing to accept a little bit higher risk. And so for Metrics, we're very active across the real estate market. We'd be the largest private credit provider to the real estate sector in Australia, outside of the banks. We've got very strong, deep relationships with many clients across Australia. That gives us, I think, very unique opportunities to source, originate, and to find good investment opportunities with our clients that are proven and trusted in terms of our prior business dealings with them. And so as a result of that, if there's an opportunity for our investors to gain access to higher returning opportunities through real estate equity opportunities that we might originate, I think it's a great way for people to gain access to a product that is really designed to give them a return profile that covers the entire capital structure of a project. And so that return comes from income that's generated through the direct lending opportunity, and then also the prospect of earning a higher total return by being involved in development, property development transactions that are private and very difficult for most investors to gain access to.
Can you take us a little bit deeper into those opportunities? Commercial real estate is obviously quite a big sector. Where are you actually seeing opportunity today? Where are you investing?
The product that we've brought to market is really designed to do two things. 50% of the capital is invested into our real estate debt fund. Now that fund's over $3 billion in size, provides a diversification across 100 individual positions, and it's relatively short dated with the underlying loans generating a return from both the fee income and the interest that is charged to those borrowers. It represents also a lower risk part of the capital structure because you're providing predominantly senior secured first registered mortgage debt. And so that aspect of the investment product is really giving investors access to stability of capital and an attractive source of income. 50% of the capital that is invested in the Metrics Real Estate Multi-Strategy Fund goes into our real estate debt fund. So for the other 50%, we're really looking for how do we give investors exposure to property development transactions where the returns can be generated from improving or undertaking the project and then delivering profits through the sale. And so when I look at it, a lot of people in the market have been focused on investment opportunities in real estate equity, where it's been more passive, buying into a REIT that's delivering an income from the rental income. Here, we're actually providing investors with access to private assets, private development transactions, with some of Australia's largest and most successful private property development groups. And so the areas that we see as being particularly attractive have really been in residential property development. So, think of the demand for housing. So residential high density apartments, residential land subdivisions. That's a significant part of our investment activity. Equally, we've seen opportunities also in the industrial part of the market. And so again, opportunities in large-scale industrial property development transactions. They're primarily the two main areas of focus for us in the initial capital raising.
I want to talk about interest rates now. The market is pricing in quite a few interest rate cuts over the next 12 months. How would that impact the fund?
I think if interest rates were to be cut, then obviously the total return to investors would decline. But what we've found when interest rates were low, private debt delivered a very attractive return in comparison to other alternative assets. And so if interest rates were to decline, obviously the total return to investors will go down, but that's going to be largely in line with other asset classes. Interest rates are going down because the economy is slowing. So from our perspective, we're not really anticipating there's going to be any significant declines in interest rates. As we look across our client base, there's pent-up demand, strong demand. Yes, the economy is slowing, but there's still a significant amount of strength in the economy. Unemployment's low, immigration remains strong, and so there's a lot of good things going on that suggest to me that the consumer's reasonably resilient, and we wouldn't be anticipating that there'll be significant declines in interest rates. Maybe 25, 50 basis points over a period of time, but beyond that, in the current environment, I can't see it.
Okay. What kind of returns and income can investors expect from this fund? You talked before about there being franked distributions. Can you take us through that?
Yeah, so the return profile in this fund comes from two aspects. On one side of the fund, we have a passive trust, which holds all of the debt investments. And so the distributions for investors there are trust distributions that reflect the net operating income from our real estate debt fund. And that's obviously passed through without any deduction of tax. And so through that process, it's akin to receiving an interest income distribution for 50% of the capital. Based on our current returns, we think the income distribution will be somewhere between 5 and 6%. On the other half of the fund, 50% of the capital goes into the active trust. The active trust is the vehicle that undertakes the property development transactions in partnership with our clients. So as we complete a project, we would expect to bring to account the profit and the returns from that project as it's nearing completion. Then on completion, we're not holding the property for income. The property is to be sold to generate cash flow, pay the tax, and then be able to distribute the profits to investors. And so we expect to be able to pay fully franked income or dividend distributions through the active portfolio of exposures that we have to a range of property development transactions.
For investors who don't really understand, how does this product work?
Recognising that investors don't want to lock up their money for long periods of time, it's really important from a product design perspective to give people choice. Now, part of that is that they've got the ability to buy and sell and trade on the stock exchange. But a big driver of that decision has to come from how does the fund value its assets? What's the governance process? How are investors confident around the quoted NAV of the fund? And so that comes to the credibility, the governance processes, and the valuation methodologies and independent oversight that the private market investment manager operates under. So if you assume that there's a high degree of independent oversight and rigour around the valuations of our assets, be it both the debt and the equity investments that we hold, then when we quote a monthly NAV of this fund, we're advising investors what the current valuation of the portfolio is. And then of course, market risk may impact an investor's returns. So the traded price on the stock exchange may be disconnected from the fundamental value of the fund. So if we quote a daily NAV or a monthly NAV at say $2 and the market price is higher or lower than that price, then that's really a reflection around investor sentiment and market liquidity as people might be wanting to buy or sell units on the exchange. So when we've quoted funds and we've listed funds on the exchange, it's always been very important for us to be able to say, this is the risk profile, this is the return objective of the fund, and then importantly, what we've also been consistent about is, we've demonstrated through a long track record of delivery for our investors, both in terms of the way in which we've managed risk and the returns that we've been generating. And so as a result of that, we've seen strong support of our listed funds. There have been periods during the pandemic where there was dislocation in the value of the traded price compared to the NAV of the fund. But that gap quickly closed, and importantly, we were proven to demonstrate to investors that the quoted NAV was correct.
Are there any other risks that you think investors should be aware of other than that volatility that they may see in terms of investor sentiment?
Yeah, on the real estate debt side, the biggest risk for an investor is the loss of capital as a result of a default of a borrower and our inability to recover the proceeds of the loan. Now, the loans are obviously secured with a mortgage over the property, and there's equity in those funds. And so if the value was to decline, then the owner of the property would lose value before our investors on the debt side. On the equity side, we think the biggest risks are really from three areas. One is the planning risk. So does the property have the appropriate zoning or development approval? Another area is market risk. So as a lender, we can come into a transaction where pre-sales have been achieved, whereas here we're often investing with a view that the market sale price can be achieved, but it's a risk. And then the third area of risk is really around the project delivery or the construction. And so again, importantly, the way we manage that is through imposing appropriate contingencies for cost, for time, for finance costs, because the biggest impediment to successful profits is really if there was a cost blowout or a delay in delivery of the project. So they're the kind of three key risks that we see really in terms of the development funding.
Okay, last question for today. How can investors access this opportunity?
We're obviously undertaking the IPO of the fund. So investors that are invested in MXT or MOT have the priority right to subscribe for capital in the new fund. Equally, there are a number of brokers that are offering for wholesale investors only access to the fund. And so we have a number of brokers that are assisting us with distribution. But then, of course, it's available for general retail offer as well. Importantly, we're looking to target a capital raising of $300 million. There is some capacity to accept oversubscriptions also.
Okay, well, thank you so much for your time today, Andrew. It was a pleasure to talk to you and learn all about the new fund.
Thank you very much.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.